Mami. Hi, and welcome again to another edition of market analysis. This is going to be a U.S. pre-market analysis, half an hour prior to the U.S. session opening. I'm Giovanni Benacourt, Senior VIP Market Analyst for Vantage. Let's get started. Welcome, Carolina. Welcome, Guzen. Welcome, Mark. Welcome, Jeff. Welcome to today's session. All right, let's get started with the disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade, and Vantage does not guarantee the accuracy or reliability of the information provided herein. Your host, Gio Benacourt, a Senior VIP Market Analyst, Market Educator, and Demonstrator of Strategies with Vantage, bringing with me over 20 years of experience as a commodities trader, and I hold a Series 3 license, and I'm also a CMT candidate. The agenda for today, or every single day, is going to be economic calendar, what's moving the markets. We're going to be identifying key levels of support and resistance levels, and we're going to be looking for some trades using tools like the Fibonacci tools and some others. All right, about Vantage. We all know that Vantage ecosystem. We offer over 1,000 instruments, over 100 chart patterns, technical tools, indicators, CFDs on Forex, indices, shares, commodities, and cryptocurrencies. What we stand for: lightning fast execution, award-winning 24-hour support, intuitive tools, and global connectivity. All right, so to begin, I'd like to share with you some of my ideas before I take a trade or for trading. I like to identify clear, consistent trading habits. One of them is not very high, but I also want to be comfortable with the prospect of losing money if the market goes against me. So that is something that you want to have be okay with. I want to emphasize on risk management. You want to educate yourself, know your risk tolerance level, and avoid common mistakes. Using risk capital of percentage-wise, 1%, 2%. So that's something that I like to use. And then volatility can spike and spreads can widen. So why not reduce your leverage when this happens? Okay. Yes, leverage is a sort of two sides. So just as it can help you, so it can also hurt you. The use of stop loss is recommendable. You want to be able to have a stop loss applied to your trades. And when you plan your trade, when you write up a trading plan, obviously you want to be able to identify trends, timing the entry and the exit points, risk management, confirmation, and validation. Right. I'm also, I think it's first important that we have a shared common vocabulary for what is technical analysis. So let's dive right in there. Now, what is technical analysis? Is it just a form of data visualization, Obviously, charts, charting, displaying market data in lots of different data visualization modes is a big part of where technical analysis came from. But you gotta go back hundreds of years to the rice pits of Osaka, Japan, for a gentleman named uh, Munisa Homa, who invented Japanese candlesticks as a way to try to capture all of the behavior of traders in those rice pits. We of course advanced the discipline over hundreds of years, and there are lots of different chart types. But what I'm gonna argue with you to you now is that technical analysis is far more than just collecting data and displaying it in a way that we can interpret a lot of information quickly. That is part of it. But if you look at definitions from some of the very early texts from the 1920s and 30s, guys like Edwards and McGee said technical analysis is about the study of the market itself, all of that price action, all of the investor behavior, everything that's happening in an open, freely traded market is part of our discipline. And I love that definition because it's quite broad, and hopefully throughout today's session you'll understand just how broad and this depth of study that you'll go through. We also know that technical analysis is a study of that supply and demand relationship. We care a lot about the behavior and the psychology of investors, and is one of the hardest things to quantify when you are thinking about investment decision. And I'll argue that it is all represented in this beautiful little element called price. And the last definition I'm going to pick on is a widely cited author, Perry Kaufman, who says it's a systematic evaluation. And systems, the reason I bring this quote up is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rule-based, repeatable approach. And that is something that was drilled into me as I went through my program. And the last 20 years that I spent surrounded by some of the best money managers in the business is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. All right. So as a refresher from your Economy 101 class, let's just remember that at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will move price down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors is inherently pushing prices up, and fear or selling pressure is going to push price down because it's a fixed supply. I want you to hold that thought in your mind because it is perhaps one of the most important parts of the magic that we're trying to unlock here. All right, and the message that of the market that we're trying to decode, which is related to learning that if you take emotion out of the would be or the could be or the should be out of your decision making, and if you look at just what is happening and you can quantify that, you have a big advantage over most humans. Now, I will argue for all of us in the investment discipline, there is a lot of emotion tied to those trading decisions that we make each and every day. And those emotional impacts, our decision making can be very negative. So the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. All right, so now let's hop into the charts. I'm gonna stop sharing my screen and I'm gonna start sharing my charts so we can hop into identifying opportunities for today. All right, so in front of you should be seeing my charts. Let's look at the economic calendar for today. Really not much in reality. ISM manufacturing coming in about 50 minutes. So that just might have some, but this week we'll have JOLTS And then on Friday, we'll have the non-farm payrolls along with unemployment rate. And so this will be the last one of the last data that the Fed will need to decide whether to cut rates this month or not. So let's take a look at the daily chart. We're seeing how the market today is in the red. It has done a pullback, strong pullback, after obviously having a strong summer. So for you traders out there, September is historically a bad month for stocks. For the U.S., September, the beginning of September is obviously kids going back to school. So people coming back to their offices after having holidays for summer. So September is usually a bad month. So if you look, just let's take a look at a monthly chart, so we can take a look at previous months of September on how that. So actually, September for 2024 closed in the green, but it did have a pretty wide swing. It had the month, it opened at 19,600. It had a high of 20 and it had a low of 18,337. So it actually did close in the green, but it did have a pretty strong pullback. Okay, so can we speculate that this month is going to be the same? Well, it's figuring that it's starting to show us that way. The first day, yesterday was obviously a calm day for markets, since we had the Labor Day market. But today we're fluctuating to the downside strongly, right? We can contemplate that 23,000 is going to be a level of support, psychological support, indeed, for the Nasdaq. In reality, let's see if we can come in and identify the direction of the market. Is it going to continue to push lower? Are we going to come in and test 23,000 when the bell opens in about 20 minutes, actually 19 minutes? But is that going to be the case for today? We're going to be seeing red across the board. The RSI is below 50, pushing towards the 40 marker. So once we reach that 40 marker, we can understand the momentum to the downside has incremented. It is continued to rise. So therefore, we can come in and speculate that other levels, if we do happen to penetrate 23,000, then we can come in and take a look towards our left and identify previous levels of swing lows. We basically have this swing low made on the 1st of August. So if there is a technical analysis, there is an old saying that history tends to repeat itself. That is one of the ways that we can come in and identify or speculate the direction of the market. So even though obviously this Friday was August 1st was a Friday, and if you recall, that was actually when Trump came in and said something about tariffs, which the market actually recovered quickly. But however, this actually was when the tariffs were coming into place, if you recall. So we have seen, obviously we've seen that particular movement. So on that month, the market fell 458 points. And today, so far, we already fallen 388 points. So another 100 points drop from here. Well, we can come in, like I said, and speculate that that's going to happen. So as far as resistance goes, I'm going to use the medium of the Bollinger Bands as a possible level of resistance if the market does decide to recover and retrace all of this movement to the downside. I am not going to be speculating that that much. So that our direction is for sales. We're looking for sales today. Let's take a look at the S&P. Again, the same behavior for this S&P. So 6,400 was a level, a psychological level. The market has penetrated that prior to the open. So we come in and speculate that it's going to continue? Well, where can we come in and find some level that will give us a direction of where we can find support? Well, 375 jumps at me. The reason why is that as I look to my left, from the low or from a swing low of today on the S&P, the first candles or the level that crosses the most candles is around that level. That is also psychological, because 1, 2, 3, 4, 5, 6. Just in this view, actually 7. So that is it's psychological. It crosses different swing lows, 3 swing lows. It also crosses a previous levels of resistance, which are now support. So that gives me more of assurance that that could be a place where we could find that support. And the second level, I'm gonna use the lower Bollinger Band as my second level of support. As far as resistance, well, 6,500 jumps at me, but that's psychological. We first have to reach that, and so I'm gonna use that yesterday's swing high. We do have a wide range, and I want you to notice this. We have a specific wide range in the S&P, actually in both indices, because we started in pushing lower today. So is that going to be the norm for this month? It could be. Look at the Dow. The Dow was basically idling, just trading sideways. The last 3 days of actually the last 2 days of August, and yesterday it did also had that particular downward movement or ranging. So therefore, let's use 45,000 again, psychological level of support, and then my second level of support, I'm gonna use basically this candle's open as possible level of support. Initially, the medium or which is a 20-day moving average of the Bollinger Band, can also be our dynamic level of support. And then our level of resistance, I'm going to use today's swing high as a possible level of resistance and yesterday's swing high. Okay, so there we have our levels of resistance and support for the Dow. Crude oil. So crude oil, well, it did fluctuate pretty strongly to the upside. Even though it opened gap down today, it has been closed. It fluctuated to the upside. So therefore, today's range is going to be our first level of resistance, a bit more higher. And then psychologically, $67 because psychological. Now support, I'm actually going to leave the first level that we have here as my first level of support and see if we do happen to penetrate that. And then the moving average or the medium, which is where yesterday the market actually reversed from. So this could be profit taking. All right. So as we see that the Nasdaq continues to fluctuate lower, we may find that momentum to push to the upside on crude oil, because there is an inverted correlation between them two. So looking, because we have a momentum to the downside on the indices on Nasdaq, I'm looking for to go long on crude oil. So looking for buys, looking to buy crude oil, opportunities to enter long. Nat gas is fluctuated to the downside, even though it did had a particular move to the upside earlier during London session. So therefore, I'm gonna use this particular area as my first level of support, and then my second is going to be this particular area as my second level of support. I'm going to leave the same levels of resistance that we have here. Okay, so again, the market is showing us direction to the downside. It is entering a supply glut. In reality, not gas. So we could probably contemplate the idea that is going to continue to look for sell entries. So looking to sell, not gas, looking to buy crude oil. Gold. Well, gold has made a new all-time high, peeping above our level of resistance. Now, in the futures market, gold has reached 3,578. Okay, that's on the December contract. So I do like to follow the futures contract as I trade the indices, because we want to be able to see that the momentum. Obviously, CFDs follow the futures. So therefore, gold making all-time highs, new all-time highs. So the idea of gold continue to move higher is applicable. So therefore, even though we did open gap up, it has been closed. So the gold is actually walking the upper Bollinger Band. So that's a positive sign to be bullish on gold. So I'm gonna actually just tying up my level of resistance here and use today's swing high. I'm gonna leave the same levels that we have here of support and looking to enter long, or looking for buys. This is a pullback, right? Profit taking after a nice rise to the upside. So looking to buy. Silver is actually fluctuating to the upside. Finally broke out of $40. It crossed that psychological dollar of 40 yesterday. So will it continue to push higher? Well, I'm going to use 41 and 41 and a half. The silver is also walking the upper Bollinger Band, so that's also an indicative of strong momentum to the upside. $40 now, psychological support, and then I'm going to use yesterday's swing low as my second level of support. But overall, I'm going to be bullish on the metals. So looking to opportunities to buy. Copper. Copper did have also a bullish momentum to the upside. Now is in the red. Profit taking. This could be applicable. Copper is inside the bands, so we can contemplate that the idea of a reversal has over the pullback, the retracement has been already been fulfilled, and now we are looking to climb back up. So I'm going to leave that level of support there, and then I'm just going to use, let me see if we can identify another level of interest. I'm going to use this part right here, 443.54. So again, looking to be long. Now on copper itself, this one may be 50-50 going long and 50 going short. Let's see what will happen. Bitcoin. So Bitcoin has been idling, just making practically equal highs, equal lows by the bodies, not the wicks. So this is looking for a breakout. I'm gonna tighten up my level of resistance to 111-ish, and then I'm gonna use this area, the close of this candle and the open of this candle. That's why I'm using it. So looking to be long the asset 107, sorry, level of support, and then one of the lower Bollinger Band for this asset. So looking to for a breakout. So currencies are, the euro is, after having a strong fluctuation to the upside, looking to have reached 117 and a half. It didn't quite get there yesterday. Today we are seeing this strong momentum to the downside. So therefore 116 psychological level of support, and then I'm gonna use this wick, this candle's wick or swing low as my second level of support. So let's see if 116 will be able to sustain itself, the euro above 116, or will it penetrate it? What is seen is it is actually doing a pullback. The medium is going to be a first level of dynamic resistance for the euro. Let's take a look at the pound. Much more stronger fluctuation to the downside. There's a strong parabolic movement. So today open gap down. It was closed and then continued the direction of the gap. So this is going to be a deep retracement or a high retracement if it's going to recover. So 133 psychological level of support. In between that in here, I'm going to use again that swing low, basically because for whatever reason it stopped here and now it's retracing, is back into inside the Bollinger Band. And remember that the Bollinger Band uses 2 standard deviations, so volatility is contracting in this asset, so meaning we could see a recovery on it. Now obviously the dollar index is going to have a lot to say about that, and it didn't make that strong parabolic movement to the upside here so far today during London session. So I'm going to use that swing high and then yesterday's swing low as a level of support. Let's see if it will be able to fluctuate out of this range, which it has been below this range since actually, but they just use this day, August, from the beginning of August. So are we going to be able to see another leg up? Well, let's see what will happen. Let's see what will happen. All right, now that we have identified our level of support and resistance, I'm going to break down the chart or go down on time frames by an hour just to have an idea to see what is the behavior of the markets has been in the previous hours, just to get a sense, to look at what patterns are being formed, right? What the market is showing me. And so in this particular asset, we've seen obviously that the market was in a consolidation stage, and then it did a breakout, and now it's doing a retracement. So therefore this floor of around 98.240-ish, 222-ish, is going to be a dynamic level of support that if it breaks that level of support, we could contemplate that it will continue to push lower towards the 98 handle. If that happens, then we will see a recovery on the currencies, right? Trying to push back up all the way back to 134 perhaps on the pound. And then since the pound is right now actually doing a reversal of that low, that swing low that it made, so we could contemplate that the pound will recover. The euro will also continue to recover and climb higher, pushing towards that double top here. So that will be obviously a consideration of an entry to a trade at 116.5. We want to be able to see that the currency is recovering. Then Bitcoin, well, we see Bitcoin actually reversing off the medium on this candle, but let's see if it'll be able to fluctuate above the medium, close above the medium, and do a reversal of the medium to the upside, obviously towards the 110, towards this particular level that it has shown level of resistance around this level. So let's just highlight this, mark this area right here. Let's see if he be able to penetrate that. Copper. All right, so we've seen copper. It's already finally making that low, and it's now penetrating the band. So initially, we can consider that the medium will be our first level of resistance, dynamic level of resistance, and the same for applies for the Bitcoin. We want to be able to see that copper continues to move higher, penetrates our level of dynamic resistance, and then does a throwback towards it, and then continues to push higher. So let's see if it'll do something like this. Looking to enter long as we penetrate, or we fluctuate above or close above the medium of this or the Bollinger Band, which is a 20-day moving average. All right, so we have silver here on this last hour, which is all right. So the market is open. Market is open. So let's see how much of a rally momentum to the upside we can contemplate here. So silver is recuperating. Let's see how much stronger will it recuperate. And so therefore, as this candle closes, we still have a half an hour under, but it's on a shorter time frame. You should be seeing green across the board on here. So gold, all right. So gold is actually looking to close above the 349, 3490. So let's see if that'll be the case. Oh, nat gas is actually just making a strong recovery, parabolic movement after this strong drop. So that's all right. Crude oil is retracing, penetrated the medium, so it's pulling back down, right? Then we have the assets, the indices, which we understand we're gonna be looking to enter short. So 45,000 is gonna be your first target for the Dow. 6375 for the S&P if your first target. Second is 6361, and then the Nasdaq 23,000 is going to be your first target, and see if it'll penetrate it, which most likely it will be. Now that we have identified that the momentum direction of the market for the assets, I'm going to go down to a 5-minute chart so we can come in and identify and take trades. Now I'm going to turn off the Bollinger Bands. I'm going to turn on fractals, and I'm going to turn on the VWAP. All right, so fractals are on, VWAP is on. VWAP for the Nasdaq is above the market. So the VWAP is volume weighted average price, which is the blue line. So we're seeing how the average price is right around, it's above 23,300. So meaning that if we are going to see a recovery on the indices, we should see market fluctuate and start trading towards the VWAP, entering the band and hitting that volume weighted average price. But since we understand that the market is in a sell-off mode, we are in a correction sense of the market at this moment. Can we contemplate that the market will continue to push lower? Well, right now the market is showing us it might be doing a recovery, but we have this area of a volume cluster, right, that needs to be penetrated. So that area right there, that's your level of resistance for the Nasdaq. If it's to continue to push higher, it needs to penetrate that level. The S&P, well, the S&P is having a bit more of a stronger fluctuation to the downside. So we want to be able to identify this area as the level that it needs to penetrate in order for us to take a trade to the upside. The Dow, we identified by that fractal high. So that will be the area for it to penetrate. But it's pushing lower. It's pushing lower. So entering short, obviously also we want to be able to allow 15 minutes of trading to allow the market to just calm and just settle. The dust will settle and see what will happen. All right, so we here have a possible setup for an entry long. Okay, we do have a fractal low, a fractal high. I do use my Fibonacci retracement tool from the swing low to swing high. I'm going to change that particular template, and I'm going to apply my template, which indicates to me that if I'm going to enter a trade, right, the golden proportion, the 61.80, which is actually is the 0.618%, but here's is represented at 61.80. That will be the area where I would have taken a trade, which basically that's what I did, and looking to go long on this asset. So if I would have done so, hypothetically speaking, then my target would be the 6180 level, which if I take a trade in this yellow area, my target is that yellow level. If I take a trade off the 78.60% of the blue line, my target will be 2720, the blue line. If I take the trade at 8860, then my target will be 1270, that red line. So I have that. Now the stop loss, okay, the stop loss is a complete retracement of this movement to the upside. So it's basically where I have it. I'm actually gonna leave it there. So I'm looking for the market to rally to the upside. So I'm gonna leave that there and see how that works out for us, or for me. Wow. So silver, I'm sorry, nat gas. It is giving us a momentum to the upside move. Wow, this is actually strong rally to the upside. So we're having a reversal of the VWAP. So the market did come to the VWAP. So a trade setup here will mean that we want the market to penetrate the VWAP as it's doing so, and then do a throwback to it, and then take off. So I'm gonna wait for the market to actually close above the VWAP so I can take a trade long, if that was the case. Then gold. All right, so gold, we've seen a bit of a pullback on gold after penetrating the VWAP. So we want to be able to close above